Hi everyone, today let's see what Jamie Dimon has to say about AI. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Jamie Dimon thinks AI is going to change humanity the same way that the printing press, electricity, and computers did. And usually when he talks, it's important for most of the world to listen. He is very intelligent, and he has led JP Chase to a lot of success. And they say here, we do not know the precise rate of which AI will change business and society at large, but we know that the consequences will be extraordinary. And we can see this already here at JP Chase. They've hired 2,000 AI computer learning employees, and they are working on 400 applications within the fraud detection sector within JP Morgan. And they say here they think this impact is going to influence the 310,000 employees across JP Chase. And then he talked about inflation here a little bit in his letter to investors, saying that he thinks inflation is going to continue to improve, but there are definitely some concerns out there, remilitarization of the world, as well as oil and gas supply and a lack of investment in energy infrastructure. Soft landing, he had it at 70 to 80%, but he believes personally that the odds are a little bit lower than that. He also has some concerns for consumer real estate as well as commercial real estate, saying that if rates stay up over 6% and we get a recession, that's going to present some risk for markets, and that a 2 percentage point increase in interest rates pushes asset values down by around 20%. Overall, definitely some interesting stuff from Jamie Dimon, and the link for this article is in the description. Moving over to fear and greed, you can see we got another slight step up here today, up to 66. You can see 66 is what we closed at, 61 was the previous read, so we're getting a little bit of a bounce from that 58 reading. And then you can see momentum, strength, breadth, no changes there. Put call ratio still at neutral. Volatility did drop down a little bit today. And then safe haven demand, junk bond demand also at the same levels that they were. So very little changes, and markets were generally flat here today. You can see that on the momentum chart, basically flat. Moving over to seasonality, we expected a little bit of a dip into the Monday session. We ended up getting flat line. I wonder if that's because we got such a large dip into the Thursday session, slight retrace Friday, and then sideways chop. So if this is going to hold true, then we should be expecting a potential bounce tomorrow and then downward price action into the end of the week. So we'll see how that plays out once we get that CPI data. Moving over to the economic calendar, you can see there was nothing really on there for today. And tomorrow is pretty light as well, nothing really, just the 3-year note auction. And then Wednesday morning, that's the big one for the week, CPI data coming in. Expectations for core month over month, step down to 0.3, year over year, step down as well. Headline expected to step up on the year over year, but down on the month over month. So we'll see how that plays out. And then in the evening, you do have the FOMC minutes and then PPI on Thursday. So lots of inflation data affecting us later in the week. Moving over to max pain, you can see this has not really changed a whole lot here. We have 507, 508, and then the call wall here, 528, right in the middle of the range right now at 518. 515 seems like a slight bottom here. 523, a potential top, but right in this zone seems like where we're going to finish. A ton of these options could absolutely disappear once we get that CPI data, and then we'll see what happens after that. But right now, this is what it looks like. Moving over to the charts here, starting off with the S&Ps here on the hourly and the daily. You can see on the hourly, we were basically flat. We were right at this trend line, added some levels here. This downtrend continues to hold. You have a bit of a shadow here at this upper level, marking these two tops. Haven't really been able to hold those levels, so you have it here. That upper resistance would be right around the level 520.88. We're still below this resistance, and it does look kind of weak going into tomorrow's session. Momentum bearish, RSI bearish, and then you can see it here on the daily chart. We're continuing flat within this region. It was up very slightly, 0.06, still below the 9 EMA and just above the 21 EMA there. So 517.12 is the support level. And then you got trend support all the way down at 511.42. And then moving over to the tasty charts here just for a moment, you can see still bullish conditions technically, but we're right in the middle of the range after dipping low. We did take out that ATR level on the Friday session and then sideways chop here today. And then looking at that 4-hour, still bearish conditions here. So mixed signals coming off of that 144 EMA, and that's currently sitting at 514.82. We'll see if that mid-range can hold or not. Currently bullish momentum on the MACD, which is interesting. And then you have those ATR stops at 524.09, which is exactly where we stopped on that Thursday session before we got that big drop down, so that is an important level, and it'll be interesting to see if we get another test of that level over the next couple of days. Moving over to the NASDAQ, similar thesis here, sideways choppy, tested that resistance, but we are technically above this trend here, so slightly bullish going into tomorrow's session on a structural level, but momentum in RSI still bearish, just like the SPY. On the day it was 0.03 to the upside, so very slightly bullish. If this breaks above 441.81 and holds, then you could see some potential bullishness in tomorrow's session. You can see you got a couple of fake outs at that level during today's session, hit that trend line and broke back down, so couldn't hold it for very long. Almost looked like we were going to break down a little bit, getting down to that 439 area. And then looking closer at this daily chart, you can see we are basically right on top of that 21 EMA, 441.28. You can see we're at 440.91, so just a little bit below it. 9 EMA at 441.86, so we're below both the 9 and 21 EMAs. And then you got VWAP right on top of that one, almost to the penny, 440.90. So could go either way. Still looking at it as a zone of resistance in my opinion. Moving over to the Tasty charts, you can see lower ATR sitting at 438.74. Sideways chop on the day, still bullish conditions on the hourly chart, just like the SPY, but we are below those longer term EMAs. You can see the 89 EMA at 441.18, could not get above that today. Tested the 144 as well at 441.72, below all of those longer term EMAs on the hourly chart. And then looking at the 4-hour, same thesis. ATR stops up at 446.60. Still bearish conditions, still right on top of all of these EMAs and SMAs. If we get a test of that lower ATR, that would be all the way down at 430.85. Moving over to the Russell and the Dow, Russell actually did a little bit better, up about 0.5%. Momentum rolling to bullish. RSI still negative, but looking to push to that SMA. Held the level here at 204.62. Touched that level and then bounced. Held the 21 as well and VWAP in there. Let's look at this on the 4-hour chart. You can see what that looked like. Test the 144, bounced a little bit right at the trend line, showing a little bit of weakness at that line. Want to see it break above 206.50. And then looking at the Dow, basically flat, 0.06, up slightly after hours, still holding off of Friday's move. Bearish momentum, bearish RSI, nothing really changing there either. Nothing really changing there from Friday's session. Moving over to the equal weighted S&Ps, this really didn't move either, and I don't really hit it every video, but I wanted to highlight this volume here. What a massive volume candle randomly here on this Monday. Basically didn't move at all, up 0.3%, but that volume candle, 22.49 million shares traded, massive volume candle, even higher than what we saw on 14 December, which is at 21 million. And you can see average volume in here is between kind of 5 and 6, 7 million. And we've got a random volume candle, massive there on the day. And you can also see it's up a little bit after hours. Let's see it here on the 4-hour. Big move on the after hours pricing, so big move there. Momentum rolling to bullish, breaking above that level, 167.53, pushing to 169.76. Pretty interesting to see that there, and I would assume this is going to have some follow through. So maybe the equal weighted S&Ps giving us a little bit of an indicator of some bullishness for tomorrow. And then moving over to stocks that we're moving today, we got Trump Media here, down 8.4% right to these lows. Looks like it's set to break down to 32. Another big move down, $3.42. We talked about this stock being not worth a whole lot intrinsically, and that it's really being propped up by Trump supporters. We'll see how that plays out over the next couple days, but it has been selling for 4 days in a row. And interestingly here, we also have Intel following a lot as well, 1.89, also falling for 4 days in a row after a massive gap down. The structure is officially broken here. We've taken out all of these trend lines. Next support all the way down at 34.66, and this does seem like it's set to break down quite a lot more. It could find some support in there at 36.79, but realistically this looks quite bearish. Momentum and RSI very bearish here on Intel going into tomorrow's session. Moving over to Apple and Tesla, you can see Apple down 0.67, and it is right at the cusp of that level here. 165.71 is the next level for me. And then below that, I think there's going to be a lot of room if this zone breaks. Looks like it's set to break here tomorrow, at least down to the 165 level. Closed on the low, looked bearish. Momentum and RSI both bearish. And then looking at Tesla, Tesla had a big move again here on the back of that robo-taxi news, up 4.9%. Momentum rolling to bullish, RSI, really no volume on the day. Pretty interesting to see that. But RSI did break above the SMA there, so potentially showing a little bit of short-term bottoming here in Tesla. Moving over to Meta and Nvidia, you can see both of these were down quite a lot today, 1.53 and almost 1% here for Nvidia. Meta still on bullish momentum, but it did get back below that level, 520.31. Next support would be all the way down at 501, and then Nvidia down at 870.95, and then support for that would be all the way down here at 809.55. Momentum and RSI continuing to trend down here. Nvidia finally showing a little bit of weakness after its monumental run. Moving over to staples and discretionary, staples hanging in there, 0.15 to the downside. Momentum and RSI still bearish. 74 level still holding. Tested that 55 EMA and broke down from there at 74.36. So we're trapped in between those levels, no clear direction yet. Obviously, if either of those break, then we're going to be going in that direction a little bit further. And then right now, discretionary is popping on that Tesla move, momentum rolling to bullish, right at the trend line, right at the 21, 9 EMA, VWAP, all in that 181 area. See if it can get above that. If it can, might push to 185 a third time. If it rejects from here, probably pushing back down to 178.45. And then moving over here to utilities and gold. Utilities up 0.66%, still at resistance 65.75, looking to push to that 66.80 level. This continues to look quite strong though, coming off of that Friday bounce. Straight continuation, looking for that break. Interesting to see utilities going higher with staples pulling back still. And then gold has been on a rocket ship here since the beginning of March, and it was up another 0.62%. These are all-time highs here for gold. Tried to give it a little bit of structure, but seems to be going pretty much straight up from here. Again, that's the inflation play. We'll see how this move survives through the CPI data. Moving over to breadth here, really no change from yesterday. Really no change from the Friday session. We did get a slight step to bullish, which is interesting on momentum. RSI still bearish on both of those. Getting a wick rejection from the 200 and the 144 EMA here on the 20-day breadth. And then looking at 50-day breadth. We were above the 55 on the Friday session, ended up rallying to the 9 and 21 zone in that 74.64 level. Wouldn't surprise me if we got like one more wick high and then a rejection from there. And then we get a new lower low down in that 62.25 area. It's kind of what I'm looking for, about a half a day or a day of rally, and then CPI data I think is probably going to push markets lower. Moving over to yields, we got yields breaking out here again. So we got 2-year breaking above the 200. It is now above all the EMAs and SMAs, momentum and RSI bullish. I didn't think we were going to close on the high here. I was watching this. We were right at that resistance and then we pushed. So looking for 8.6 as your next resistance. If it breaks there, this could push back to 5. And last time we were in that 5 range, that was quite bearish for markets. You can see when we were in this range here, that was the October low. So yields have been rallying and markets are still hovering at their highs, which is a little bit concerning. And then similarly here on the 10-year, up 0.41. We broke that 4.35 level again on the Friday session, closing above it, a couple of wicks above it, but then we closed above it on the Friday. Got a continuation here. A little bit of a wick rejection, but probably just a first test of this zone. And again, last time we were here, this is the October low, 10-year yield was hovering around 5%. If this starts to push another 0.5% or so, that could absolutely be bearish for markets, and really we haven't seen yields affecting equities that much here recently. Moving over to the dollar, we got a bit of a down move on the dollar. It's closing right on that trend line, so we had a really strong push, got above 104. Since then we've broken down, retested, and breaking down some more. So at this point you would expect this momentum to follow through. RSI looking bearish, so we should see a little bit more dollar downside tomorrow, which might give equities a little bit more room to the upside. So keep that in mind as we go higher. Again, interesting, we have the dollar going lower, we have yields going higher, and a bit of a mixed bag on the major indices. So looks like there's just a little bit of confusion going into the CPI data. Moving over to JNK and TLT on the bond market, you can see JNK caught a little bit of a bounce from that support, hovered in that zone for 4 days, and now we're breaking a little bit higher. Momentum rolling to bullish. RSI looking a little bit bullish, a little bit of volume there as well. Could give you an indicator of some bullishness to come in tomorrow's session. Highly traded zone up here at 94.50, and then TLT actually hanging in there on the day, only down 0.01 considering that yields were going higher. Momentum and RSI both bearish here. It still looks bearish coming off of that trend line, but it did hold the low from Wednesday of last week, so could go either way. Definitely looks bearish in my opinion. Moving over to volatility, you can see move index continuing to go higher as yields are going higher. And then VIX, on the other hand, cratering here a little bit. Didn't get all the way down to 14.7, but momentum rolling down, RSI rolling down, probably has about 1 or 2 more days of downside potential. Again, I think CPI is probably going to send volatility a little bit higher, and then we are moving into that earnings report. In terms of levels, got trend resistance up around 16.7, and then above that I have 18.5. Moving over to my accounts, I ended up positive on the day, about $300, $350 or so, starting to claw back some of those losses that I had last week. I think I was down about $1,000 last week, and now you can see up a few hundred now I'm up a few hundred this week, and you can see in terms of positions, I didn't change a whole lot. For the IWM, I did roll up and out to 250, 205 for the Wednesday session. I was able to do that for a credit, so $2.15, giving me a max profit of around 207 and change. And it's such a high credit because of the volatility around CPI. And then Qs, I was a little bit hesitant here. I went down to 439. I might roll this up a little bit if markets look strong, or potentially even put back on a covered call position. We'll see going into tomorrow's session. It looked weak on the 5 and 15 minute charts, and then after hours we got a little bit of a bounce up to that 441 area. So we'll see how that plays. I do have a small position on 2 puts at 439, only 69 cents credit, so about $140 potential on that position. And then here 436 call, I just rolled it out a day. I could have rolled it up, but I would have had to pay to do it, and then I can roll up pretty decently into the CPI with the expansion of volatility. So we'll see how it plays out. I was a little bit concerned at the end of markets, and now we're getting a little bit of a bounce after hours. So still a little bit cautious, but more bullish today than I was on the Friday session. Let me know down in the comments section what you thought of Jamie Dimon's comments. How is AI going to change the banking sector? And what did you think about his inflation projections and the potential for a soft landing? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.